Good day and welcome to the PSG Wealth Offshore Performance Overview for March 2026. Markets were mostly negative in March as the MSCI RQ was down by 7.18%. The MSCI World also trimmed by 6.37%. Emerging markets posted a negative 13.06%. The S&P 500 ended the month down by 4.98%, while the UK's FTSE 100 was down by 7.98%. Asian markets were also red over the month as Hong Kong equities were down by 6.86%. Japanese equities posted a negative 14.27%. Global property trimmed by 9.63% over the month. And looking at bonds, sovereign bonds were down by 3.81%. Investment grade bonds were also down by 3.05%. And emerging markets bonds also posted a negative 3.51% return. Over the month, 91 Capital Group and MFS Meridian appeared amongst our top performers, while Fidelity and Bailey Gifford were amongst our bottom performers. As a result, 10 funds were included in our quantitative radar, while 8 funds were in our qualitative radar. And looking at our solutions, the Global Preserver Fund of Funds USD class underperformed the sector by 75 basis points, with only 2 out of 5 funds outperforming the benchmark. On the other hand, the pound class outperformed the benchmark by 1.34% as 4 out of 5 funds outperformed the benchmark. The USD class was in the second quartile for the 3-year recommended investment period, while the pound class was in the fourth quartile. The Global Moderate Fund of Funds underperformed the sector by 1.55% as 3 out of 6 funds outperformed. The fund has managed to produce a second quartile performance over its 5-year recommended investment period. The Global Flexible Fund of Funds USD class underperformed the sector by 2.34% as only 2 out of 7 managers outperformed. The pound class also underperformed the sector by 1.07% as also 2 out of 7 funds outperformed the sector. However, the USD class is in the first quartile over the 7-year recommended investment period, while the pound class is also in the first quartile over the 7 years. The Global Creator Fund of Funds underperformed the sector by 1.38% as only 6 out of 10 funds outperformed the sector. The fund is in the second quartile over its 7-year recommended investment period. The solutions continue to produce a consistent first and second quartile performance over the long term and are performing relatively well over their recommended investment period. And lastly, looking at our 3-pillar approach, even with the volatility over the year, the team still achieved the objective of delivering consistent above average performance at below average risk while maintaining a competitive price. Thank you.